Regulators, supervisors, and other interested parties from ADB developing member countries and other parts of the world. The special session today will explore the role of green investment banks, the role they can play in scaling up investments in climate action and sustainable development goals, and how to establish them. I'm pleased to invite our Director General, Sustainable Development and Climate Change Department, BRUNO CARRASCO, for moderating this special seminar. Areas of, as well as management on strategic and policy matters. So without further ado, let me hand over the proceedings to our Director General, BRUNO CARRASCO.
All right, thank you very much for that introduction, Arup, and I am very excited that we've been able to bring together a very impressive group of participants, so thank you very much for coming. We still do the hybrid, but it's nice to see increasingly faces coming together. Today's seminar, of course, will focus on unleashing the potential of green investment banks to transform the financial sector, understanding of green investment banks, the important role that they have in the economy, their benefits, and of course some of the challenges. Learn about the feasible options that they represent for supporting the low carbon and resilient development in the financial system. Secondly, we will look at how we can identify key success and sustainability factors of green banks, looking at various green bank cases. And thirdly, and lastly, we would like to share insights for across the developing economies in Asia Pacific to see how we can build from these lessons and look at establishing more effective green banks, and particularly looking at their operations. So most of your countries, if not all, have, I'm sure, in development banks, and many of these development banks are in that transition towards green development banks. So we certainly would also like to hear from your own experiences. We have assembled in this seminar a group of outstanding experts, and we're very pleased at that, who will guide us and help us to uncover the potential of green banks financing, including the just transition. They will also, of course, share their experiences in their respective green banks, particularly in the United States and in the United Kingdom. These distinguished presenters will also be more than willing to answer any questions that you may have in terms of the challenges and opportunities that green banks may face. So this is really something that we will also like to hear your questions that you may have. I therefore encourage all of you to listen carefully and to please come in and raise any questions that you may have, and that will lead to a very interactive and productive seminar. So thank you very much for that. With now Dr. ULRICH VOLZ, who's sitting to my left. Dr. VOLZ will give us a backgrounder on scaling up green investment banks and the limits to project-based mobilization of private capital through green
Professor
investment economics banks. And director of the Center for Sustainable Finance at SOAS.
I'll try to give a bit of an overview of what green investment banks can do. And then I'll try to make the case for a much greater role of green investment banks. I'll talk about some key considerations regarding the establishment of green investment banks, or transforming existing public development banks into green investment banks, and then the specific role of green investment banks in the global south. So that's my game plan, and let me first give you the definition of green investment banks. there are indeed a lot of different. So for the time being, we have actually only, well, 3 handfuls of green investment banks or green investment bank-like entities. Most of them are actually indeed part of a commercial financial group. So we have a couple of green investment banks, but not that many, and I will try to convince you that we need much more green investment banks and that they need to play a leading role in financing the low-carbon just transition. This clicker is... The ADB, I think, can play a very important role in the Asia-Pacific region in helping the establishment of new GIBs and also established financial institutions to transform themselves into green investment banks. So a bit of background. You're all very familiar with the various numbers circulating regarding the need for greater investment, of course, in clean energy, all kinds of other critical infrastructure on the adaptation and mitigation side. And of course, there's the whole SDG financing agenda. And the problem is that for the time being, we haven't been very good at mobilizing private capital. We all know that there's a scarcity of public funds, and of course, the MDBs have set out to mobilize trillions, but this billions of trillions of data, I think, if we're honest, has failed. So this project-based approach, project-based de-risking approach of blended finance, even though we have some very nice examples, at scale it has not been successful. And here I have my favorite quote from Charles Kenny from the Center for Global Development, who a little bit provocatively said, the idea that you can use a little bit of public money to bring to life a vast array of private investment projects in infrastructure and services isn't just private capital, but we need to do it in a much better way. And so I'm having a bit of a problem with this clicker. Through public development banks. So the MDBs, for example, for safe assets, which public development banks or multilateral development banks can offer, and so they have a 1-to-9 leverage ratio on their paid-in capital. And so there is now, of course, a very important debate about the capital adequacy framework reform at the World Bank and at MDBs, and so there's a lot of discussion how MDB balance sheets can be used better, and that's a very important one. But we also should be looking at the role that the national development banks can play in mobilizing. GIBs actually can be key vehicles to mobilize private capital because also the private capital domestically. So if we look at developing Asia as a whole, even excluding China, the region is actually a net capital exporter, which is not what we want to see. We need much more domestic savings being mobilized domestically for investment in local infrastructure and so on. And what is lacking are proper vehicles to make that happen. And green investment banks, or public investment banks more generally, can be key vehicles to achieve that. And so there are, in principle, 2 options. One is work with existing national development banks, increase their capital, make them fit for that job, also give them the mandate for green investment, or the other option is establish new green investment banks, and I'll talk a bit about the trade-offs later on. The important point is that institutions like the ADB can support both approaches with existing instruments, but also, of course, there should be a discussion on what new instruments may be created at institutions like the ADB to help a greater role of GIBs. So, the case for green investment banks. First of all, it's important to highlight the limitations of private finance. And when I highlight this, I don't want to say that we need to get rid of private finance, absolutely not. So we need commercial private financial institutions, but we also need to complement them because there are important limitations, especially in the developing world. One is there is a lack of long-term credit, which is a big problem when you want to finance structural transformations such as a low-carbon transition. There is also a scarcity of private finance activities with uncertain returns and positive externalities. And a lot of the stuff that we need to get financed very urgently has huge external positive externalities, which from a private commercial perspective don't matter, but they matter greatly to our societies, and we need financial institutions who will finance them. So these are the limitations, and these are of course then also supporting the case for public development banks. And there's a long list of reasons why they can do a lot of good. They can provide counter-cyclical finance, they can provide finance for structural transformations. In particular, they can foster real innovation, entrepreneurship. They can provide patient long-term capital. And they can fund new sectors which often face high uncertainties. And very critically important, they can showcase the viability of different types of green investments. And given their broader public mandate, they can also help improve infrastructure for information, data. They can help develop skills needed for financing green investments, and they can also help improve local capital markets. And last but not least also, they can help put a greater focus on financial inclusion. So they can in many ways contribute to the financing of local, regional and global public goods, and that's what we need a lot of. I'd like to highlight that already public development banks are playing a critical role at the multilateral, kind of global level, regional level, and national level. We have 522 public development banks at the moment, but only a few of them, so less than 20, actually do have a very explicit green mandate. But they finance around 10% of global investment, so they are really important financial actors. And I will argue that we need them to become key financiers of the green transition. And if we look at their current lending profile, we can actually see that a lot of the financing that they provide is long-term financing, which is exactly what we need. We need more of that with a green focus. And this is why we should be having public development banks with a specific green mandate, with a very strong expertise in finance, can address the shortage of information on, for example, climate risk. They can work with market participants the same way that regular public development banks do. They can help build local expertise in low-carbon technologies, projects and investment, and again, super critical, they can demonstrate the profitability of low-carbon investment to accelerate the market development, and also, in the next step, bring commercial financial institutions into the game. And last but not least, just like the ADB is doing, a lot of national development banks are working closely with governments in developing policy frameworks, and that again is where green investment banks can add a lot of value. So let me now highlight a few key considerations in the development of green investment bank. Is stable, if there is a functioning financial sector, you need a clear development strategy. And for green investment banks themselves, it's absolutely critical that they have a very clear mandate. A mandate with a public purpose for investing, really this public purpose perspective is critical. So it should not be just focus on returns, because for that we have commercial financial institutions. And there is a discussion to be had regarding the greening of existing public development banks versus the creation of new institutions. And I would say that it depends very much on the context. So, as Bruno mentioned before, most countries have already public development banks, and it may be easier to work with existing development banks and kind of equip them with an updated green mandate, build capacities and so on. So if that is a viable option, then there are good reasons to go for that. But there may be also very good reasons why countries want to establish a new dedicated green investment bank. So one thing that's of course absolutely critical is that green or not, any public development bank should be well governed, it should be well managed. And here we have a bit of a checkered history, as you all know. We have examples of very well functioning public development banks, and we also have, and often in the same, or sometimes in the same countries, also examples of badly governed public development banks. So if you have a well-governed public development bank with a strong track record and so on, this may be a starting point. But obviously, if you have a failing institution, you don't want to add a green mandate and then hope that everything will be working well. So in some cases, it will be better to create a new green investment bank, because it also depends not only on the quality of governance, but also on the conviction of existing institutions, whether they're ready to have this transformation. Some public development banks have a very strong mandate already for certain types of financing, for example, SME financing, and it may be very difficult to transform an institution that has a focus on SME financing into an institution that would focus on infrastructure financing. Yeah? So you'll have to see. Of course, critical at the end of the day is that you build up a stock of high qualified staff. So whether you reform an existing institution or set up a new one depends on the specific context. There are good reasons for both. Well, the clicker doesn't like me. That you can have different processes. I mean, government executive action. Some countries you need to involve parliament and so on. But the kind of straightforward way would be to use government finances. In some cases, public development banks have been capitalized. Government obligations, utility bill charges that could be then used, carbon tax revenues and so on. But also, and that's something I will talk about later on, you could use international resources from MDBs, DFIs, global funds to capitalize the GIB. And I think this is where we need to have much more of a discussion. One can also bring in private capital. And there are also even discussions at the World Bank level, kind of have non-voting shares and so on. But what's absolutely critical is that the institution, the new institution has to have a great degree of accountability, independence and public transparency. And as I mentioned before, it's absolutely vital to get the mandate right. Yeah? So the mandate should be guided by public purpose that is anchored to green and just transitions. Getting the mandate right is absolutely vital. Infrastructure projects and so on, they can also provide risk mitigating enhancements. Pretty much like the public development bank. Also, there are different ways. They can provide loans, equity, mezzanine capital, investment funds, bonds, structured notes, grants, and so on. It's all pretty straightforward. But let me get to one issue that is really important, especially for institutions like the ADB. How can DFI support green investment banks in the global south? And here there are, in principle, two ways. The first one is through technical assistance and capacity building. Building a green investment bank will require a lot of expertise. You need a lot of well-qualified people who can drive the operations forward. And just like with public development banks, institutions like the ADB can provide technical support in developing strong governance structures, building sustainable finance expertise. And so this is important for existing public development banks that want to transform into GIBs, but also this is important for institutions that are developed from scratch. So that is one important aspect. And of course, there can be also support to governments in kind of helping to set up mandates and so on. But then the second important area relates to the financing. And here it's important that green investment banks will develop a strong standing in capital markets. Also, that they will have a strong credit rating because they need to raise capital at low rates so that they can finance at cheap rates. This is absolutely vital. And infrastructure requires a lot of high upfront cost. And of course, if you have high cost of capital, it's going to be much more difficult. And here you can see the cost of capital for a solar PV project in 2021. On the left-hand side, for advanced economies in China, where interest rates were around 4%, and then for emerging developing economies, where they were around 12%. Now, it makes a huge difference whether you want to finance a project with 4% or 12% cost of capital. Green investment banks, to really play the catalytic role they should play in financing low-carbon, climate-resilient infrastructure, they really need to have the right level of funding cost. And so the problem here is that the refinancing conditions of any public development bank, including green investment banks, are basically tied to the credit rating of the sovereign. Yeah? So there is a kind of sovereign ceiling effect. And that is a big problem, because if the sovereign has a high cost of capital, the public development bank has a high cost of capital, and then it's going to be very difficult to really get the financing going. And here, public multilateral development banks, DFIs, can play in, can come in and play a really important role. In particular, DFIs could provide paid-in or callable capital to capitalize green investment banks. So this could help to improve standing in capital markets and enable these green investment banks to issue bonds at lower rates than without this international support. Of course, having, and that's my timer, but I'll be done soon. Having, of course, an involvement of MDBs, DFIs, in these institutions would also help from a governance perspective. It would be reassuring that these institutions are well run. So providing capital is one way. Another way is to provide some kind of a guarantee on bonds that reinvestment banks would issue. So that would not change the credit rating, but it would, or the bond issuances would benefit from the AAA rating of the guarantor. And then a third option, which I would say is inferior, is that DFSI could themselves issue bonds and raise capital at low rates because they have AAA rating, and then pass it on to Green Investment Bank. But the problem here is that you won't have the leverage effect that the National Investment Bank could have otherwise. So having some kind of credit enhancement for the Green Investment Bank, or even some kind of capital provision would be ideal. Is it moving? Yes. So this is my last slide. So so my key message here is that green investment banks, even either transformed ones or kind of entirely new ones, can really play a critical role in scaling up green investment in the region, and of course elsewhere as well. They can leverage private funds and maximize total investment by partnering private resources. So they can, by issuing bonds, they can attract domestic savings and really scale up investment. They can play a really important role in showcasing the viability of innovative green investments that can be later followed up by private financial institutions, and they can also play an important role in mainstreaming ESG considerations across the financial sector. And so it's great that the ADB is having this discussion about how to support green investment banks, and it's a great pleasure to discuss this with you. Thank you.
Presented the importance of long-term financing, looking at the importance of bringing in greater externalities, particularly when we're looking at climate, recognizing the impacts of capital. So with that, thank you very much. Now we will turn to our second speaker, who is my great colleague, Jung-Kyu Lee, who is the Chief Financial Sector and who has been leading a lot of the work on financing across ADB. Jung-Kyu is going to be making a presentation on some of the key considerations on ADB's climate finance investments. So over to you, Jung-Kyu. Thank you.
Thank you very much, Bruno, and also the kind introduction. Actually, the photo here, as you see, is a 10 years ago face. It looks like a pretty young.
This horizon, kailangan ka maghanda. Kasi ang ating Pilipinas at pwedeng bisitahin Baguio, Lindol, pagsabog ng bulkan at tsunami. Maghanda ka at palitin ng mga mahal sa buhay. At isama mo na yung mga listeners.
Morning, Miss Horizon. Ito sa ating project Maghanda.
Morning, Miss Horizon Chaser. Well,
Good morning.